Okay, this video is going to focus on the second of the key external influences, that being financial. So the first video is focusing on economic and the broader economy, booms and busts, unemployment and full employment. And this is going to focus on the financial sector and the financial industry and the influence, some of the key external influences and the way that it has an impact upon business. It's important to look at this from a global standpoint, and the fact that changes in global financial markets have impacted businesses through, and we'll look at the first major way that the finance sector has had an influence on business, and that was through deregulation. So deregulation, what does that mean? Well, it's the removal of government regulation from an industry with the aim of increasing efficiency and improving competition. That deregulation occurred in Australia in 1983 within the finance sector, and it resulted in a more flexible market-orientated approach across the finance sector, with new financial products available for businesses that previously were not available. Because of the decrease in regulation meant more global players came to Australia and began to operate here. That improved the financial state of many businesses and continues to do so. Firms can now borrow more easily, and which affords the business more options, such as the ability to borrow from global banks at more competitive interest rates. The second major influence from a financial perspective has been globalization, and businesses require significant capital to be able to operate, particularly medium and large businesses. They need to source that capital, and the sourcing of that capital can occur through the borrowing, i.e. through debt capital markets, or conversely through owners investing more money into the firm. But globalization has meant that firms can access capital right across the globe, and they're given many options and opportunities to borrow that capital. From a capital perspective, both debt and equity finance are influenced by global interest rates. The higher the rate of borrowing, the more likely a firm will seek equity, and vice versa. And again, the advantage because of globalization means that firms can seek that borrowing of capital wherever they wish. Okay, in the next video we'll focus on geographic.